All right, so this is a backtesting session on Bitcoin that I did today. The reason I'm doing it on Bitcoin and not USD Canada is because I found Bitcoin to be a pretty good secondary pair when USD Canada is live. I do this when my USD Canada trade, which I made a recap about earlier, was still live, and I did this back testing during that because I really couldn't go on to USD Canada. I decided that Bitcoin might be a good secondary pair for me due to the fact that although it has very high volatility, it still is relatively stable compared to other cryptocurrencies. I just thought it would be important to master at least one crypto pair just because of the increasing relevance and importance of crypto and possibly its future as integration with global currency. Whatever it is, I just thought it would be a good idea to do a little bit of back testing on it just to learn a little bit more about crypto. And what I've found doing these this backtesting session is that the fair value gap seems to be more prevalent, or at least I've noticed it more. And I think that's due to high volatility, that because Bitcoin isn't really tied to any it's not really tied to any actual value. I think that smart money concepts are more important than ever, and it's like news is pretty much obsolete or pretty much irrelevant in terms of Bitcoin, although it does matter. And so I just decided that coupled with the fact that it's open 24/7 and it may work better with my schedule, I just thought Bitcoin would be a decent pair to at least explore more as a potential secondary trade. One thing I would say is that on paper trading, I would risk at most 0.5% on a trade, but that's only if I'm really confident. I would have to do 0.25% for most of my trades and maybe even 0.125% just because crypto is so unstable and I don't know anything about it. And the fact that less than 3% of people have ever been profitable in crypto, overall, it seems like a little bit of a, it seems like gambling pretty much because it's just such a Wild West thing and there's no regulations, etc., that Forex may have. So I just feel like although it'd be in my best interest to explore, and I still want to explore, and I still think it would be a decent idea to know about. I just want to start slowly. So my first back testing trade was taken, sorry. This, I believe, was my first back testing trade. This pretty much followed the rules of smart money where price had a very stark bullish candle. It's not even showing up here. I don't know why, but I think that either market closed or some delay happened or there was just such a stark dump that there's not even a candle here. So I don't exactly know why that happened, but it just price just dumped down here. Price hits this order block, this one like last swing down, and it retraces into this area right here, which is within equilibrium. Um, Up here, this is when equilibrium gets formed. Price retraces into this fair value gap. As soon as this fair value gap gets hit, scroll down to a smaller time frame and then you're good. I'm good to go as soon as I find a order or a break of structure, and which would be either right here or right here. Um, this is only on the 15 minute because it's so far back. I can't view it with on a closer time frame, and then pretty much set my stop loss below here, take profit all the way up here, and it would have taken a while, but it would have hit. The one thing I am kind of confused on in this trade is that I don't really see much of a trend, and I don't want to take. I guess price was technically in a bit of an uptrend and then downtrend. I don't exactly know how trends work with crypto and how relevant they really are given the volatility. I just think that this trade would have definitely been a 0.25% trade or maybe 0.125% given that I just kind of guessed with the I kind of just peeked at the answer and then knew it would go up and I just decided how would it look good or how could I possibly view it with a bullish lens. In other words, I probably would have shorted this in real life, but I just knew that it was going to go up, so I decided to see how it would work, how I could have taken a bullish trade off of this if I had to take a bullish trade. So over here on the second trade, this one we are in a pretty definitive uptrend, or we are in an uptrend. So this one I'm a little bit more confident about. Price sort of stalls here, comes back down, goes up to the moon, retraces down here, and then once I get a break of structure off of here, this retracement, I'm good to go. So I would just scroll down to a uh sorry. Yeah. I would just find in break of structure right here. I don't know how good or how valid this really is, but I just see price pushes past this green candle right here. It pushes past this body. And if I could go on the 1 minute, I could probably find a break of structure all the way down here somewhere and then just long it from with take profit up here, stop loss below here, 1 to 1.5 risk to reward ratio trade, and then it would have hit, of course. So this trade, since it kind of hit all my confluences, except for fair value gap, which I don't really use, is if I had to do a 0.5% trade on either this trade, the previous trade, this would be the one. So this one, I don't think I would have done a 0.5% risk trade, but this one I'd be far more inclined to do so. Third, I have this trade right here, which is pretty similar. Price just absolutely dumps. Um, It does make this equilibrium right here. Price has this order block and it kind of pushes into it multiple times, even wicks below it a little bit, but then it eventually breaks structure out of it. Break of structure indicated right here when it pushes above this candle. Stop loss below here, take profit above here, and this would have been also probably a 0.25% risk trade, but this trade I would also be slightly more inclined to maybe go up to 0.5% just because it hits all the confluences. I could have also taken a trade had I missed this order block, which I frequently do, and am not very good at catching the right, getting the timing right. I could have gotten a retracement off of this fair value gap right here. Price retraces, goes almost fully through this fair value gap before soaring up. And if I had to do that, I would set my stop loss below here, take profit. I would do the reflection and mirror, so 1 to 1.5. Set the stop loss down here, and whatever the stop loss is, just make this move this up so that it would be 1 to 1.5, and I'd be good to go. So price continues to soar. It pushes past 103,000, goes all the way up here. Stark bearish retracement comes down to this order block, fluctuates a little bit, comes up, comes back down. Very similar. Forms an equilibrium and our take profit up here. So as soon as we get a break of structure right here, although again I could have zoomed down even further had I if I had TradingView Premium and gotten one right here, or right here, just fine. Green candle, red candle, green candle that's higher than the previous. Um, stop loss below here, stop loss below here, take profit above here. That would have hit, of course. And I believe this is my final trade, but right here we have a bearish retracement into an order block once again. Price comes in and comes out of it. Um, and then we get just a bullish break of structure out of here. And then we get a sorry, we just get this retracement, we come out of it, and then as soon as we come out, we're probably good to go. Right around here, I believe, or maybe up here, I guess if that's the previous candle. Although actually, because this is the last green candle, I could go all the way from here. So in theory, I actually could have gotten like a 20 to 1 or a 15 to 1 risk to reward ratio on that trade, which would have been absolutely absurd. I likely would have had to move the take profit down as well. So overall, what I would have done is I would have entered this trade because it's not really a strong retracement. It just goes down, fluctuates a little, come back down a little bit. I would have taken it off of retracement into this fair value gap right here, break of structure out right around or right at equilibrium, or where in this zone right here, and then just gotten a fixed 1 to 1.5 risk to reward ratio trade which would have hit. So that's pretty much been my five trades on, or my five back tested trades on Bitcoin. That would have been pretty risky. I would have to backtest a lot more before I actually start taking paper trades on Bitcoin, if I even do at all. But it was interesting to see how different this market is, and I feel like it tends to respect maybe the daily bias a little bit less, but it tends to respect smart money concepts like liquidity sweeps, order blocks, and equilibrium a lot more, which is what I like to see. So overall, it was great being able to trade on, um, sorry, it was great being able to trade on Bitcoin, and it's good to see how crypto really works.